In this video, I'm going to break down exactly how I trade funded accounts, the sizing, the risk, the payout strategy, and how you can scale this up to a $10,000 a month business. In my last video, I explained exactly how to get to this part by passing the evaluation, so make sure to watch that if you haven't already. This is the exact system that I personally use to get over $1.2 million in payouts, and how I'm currently making $30,000 a month. Here's some screenshots of payouts I've gotten. This is from Take Profit Trader, these are from Apex, this is from Alpha, and this is a copy trader screenshot right here. So we need to start by establishing the difference between the evaluation and the funded account. Evaluation is going to cost money, you don't get payouts, and it's temporary, which we discussed in the last video. But now that we're on the funded account, this is where the actual business and the important trading lies. Most people get excited when they pass the evaluation, they think they've done something, they've accomplished something, but that really is just the gate to the funded account, which is the real trading. Most people trade the funded the exact same way they traded the eval, and that's how they blow it on day one. You've probably done this too. But the difference between people who get paid on the funded and then people who don't isn't necessarily just the strategy. It's how you handle losses, it's how you treat the account. It's fundamentally about how you approach it and how well you can stick to that approach. So let's get into it. Let's start with exactly which time of day I'm trading. I prefer to trade the New York Open. I get on about 30 minutes before it starts and I trade for the first hour of the New York session. I get on at 9 to see how the chart's moving, what the support and resistance levels for the day are looking like, and what my levels to watch generally are and the bias for the day. I might even take trades between 9 and 9:30, but I typically don't. This hour and a half right here is when you're going to get the most movement, the most volume. It's when the setups are going to be the cleanest and you're going to have the most opportunities to make money. In terms of which days to trade, you really want to use your own judgment for this. I of course skip days like bank holidays and when there's news coming up, but also when the movement is just generally slow or unpredictable, I try to stay away. On slow days, I'll often take a trade just to hit the minimum required days on a certain account. A lot of accounts have 5-day minimums or $200 day minimums. So on slow days, I'll just take a small trade. I'll hit that requirement. So I'm still getting towards the payout, but I'm not necessarily trading full size. So once you know when to trade, the next thing is to know how big to trade, which is where we get into position sizing. So this is going to depend on what size account you have and your personal risk tolerance. Personally, I like to do 1 to 2 contracts per $50,000 of account value. So if we buy a 50K account, I want to trade 1 or 2 contracts. If it's 100, we'll do 2 to 4. If it's 150, we'll do 3 to 6 contracts. This of course varies day by day depending on how good the volume is, how good the movement generally is, and how confident I'm feeling in my own greed. This is pretty aggressive compared to most people still, but it is a funded account. It's simulated. It's still not real capital. So I do believe in going somewhat aggressive on funded accounts. Even with this aggression though, we are looking for selectiveness, not aggression in general. If you're not hitting your plays, if you've missed 2 or 3 in a row, just call it a day. We do not want to be taking more than 3 plays in a day because at that point, you're not taking A+ setups anymore and you're not being selective enough. But if you're being selective to the correct degree and you're using this sizing roughly on these accounts, you'll be able to hit your daily targets fairly easily. Again, when it comes to the number of plays, we want to do 1 to 2 plays, 3 maximum. After you've taken 1 or 2 plays, if you want to know if you should continue, these are generally the things you want to look at. The first thing is the movement. Has the movement been good enough? Has there been enough movements? Are there enough points going up and down for you to actually make substantial money? If there isn't, then just call it a day. Assess your own play qualities. Have you been sticking to your rules? Have you been sticking to your setups? Did those setups work today? Some days your system simply will not work. This is probably the hardest part, but check your own emotions. If you're trading angry, if you're revenge trading, if you're over trading, you need to physically close your laptop and walk away. Another thing is account standing. If you're close to blowing the funded, it might be better to just wait for the next day. Likewise, if you've already secured the payout, there's no reason to keep trading that day. And the last thing is the chart read. Just how well are you seeing the chart? Are you predicting the movement correctly? If you are, then maybe you can continue. But overall, this is the general guideline I would follow. 1 to 2 plays, 3 maximum. Now, one thing that you absolutely must have is a daily loss limit. Without this, you will blow so many funded accounts, you will lose a ton of money. The general rule of thumb I like to go for with daily loss limit is to make it a number where I would have to hit it 3 days in a row to blow the account. If my total funded account drawdown is $2,000, I'll divide that by 3 days and get $666 as my daily loss limit. If you hit it, you physically close your laptop and you walk away and do another activity. That specific point of doing another activity is what helps me stay away from the charts. And the goal really is to just stay off once you've hit your daily loss limit if you can't physically program it in. Now that was the maximum that you want to lose, but how much should we actually make? This really depends on what we plan from day one of the funded account. You want to plan how much your payout is going to be the minute you get the account. This is especially true if you have an account with a consistency rule. For example, let's say an account has a $4,100 target where the maximum payout is $2,000 and the buffer is $2,100. Meaning after the payout, you still have to have $2,100 in the account remaining, and you'd have to make $2,000 on top of that to hit the max payout. Now, assuming an account like this has a 20% consistency rule, you now already know that you can't make more than $820 in a day. The reason for this is that if you go over $820, the total amount you have to make is going to increase because of the consistency rule. So you want to figure out your target beforehand and then use the consistency rule to calculate your daily targets. If an account doesn't have a consistency rule, this is not going to apply. At that point, you judge it day by day, you see how the movement is, you see how your trades have been, and based on that, you stop when you think you've had enough. Another way to do it is to just have your own daily targets proportional to the daily loss limit. It can be the same same amount or twice as much depending on your risk to reward on your system, but try to have a level where you stop at, where you know you're happy if you hit, and where you can consider it a successful day. Now, when should you take the payout? I have a hard rule that if a payout is available, you take the payout. Money in your bank is always going to be a win, and it's way better than money in a funded account. I cannot tell you how many times I've been able to take a payout and I didn't. I tried to push it further and I blew the whole account. I think about those instances to this day, even though it's been years. Especially if you're in your first 1 to 2 or even 5 payouts. Each payout is so important. You absolutely have to take it if you have the chance. Now, if you followed along until now and you've applied these things correctly, we are going to get to a point where we can start to scale up. You probably started with one account, and once you've gotten 1 to 3 payouts on this one account, you want to add an account. Once you get 1 to 3 payouts with both of these, then you want to add another one. The strategy with the scaling is very simple. You're going to take the same size across all the accounts, you're going to take equal amount of payouts, and you have to understand that this is house money you're playing with now. You're just going to keep scaling up as you get paid more and more. How quickly you scale up depends a lot on yourself. There is a certain psychological burden to trading multiple accounts at the same time because you understand that there are thousands of dollars of capital on the line in eval fees. So if you find that you're trading way too emotional or you care way too much about the accounts when you're trading multiple, it's a sign you need to slow down your scaling or even lower the amount of accounts you're using. It also depends on your individual situation. If you absolutely need the money that you got from your first 1 to 3 payouts, then use the money. But if you're able to consistently get payouts, it's very smart to reinvest because it can compound very quickly. Now, when you are scaling up, I would scale to the very top range that the firm allows you to. A lot of firms have a max account of 5, some do 10, some even do 20. If I were you, I would try to master one firm before you move on to the other one. Start with one account, scale up to 5, then 10, then 20 eventually. And if you're still able to get consistent payouts with that, and if you're reinvesting the whole way and you're able to get consistent payouts, then take your money over to a different firm and scale up from there. But none of that matters if you can't master the one thing which blows the most accounts, which is just losing days. How do you know when to stop trading aside from your daily loss limit? The first sign is simply that you just cannot read the chart today. Even outside of your trades, you should be trying to mentally predict where the chart is going to go. If you notice yourself getting every single candle incorrect, you might just have a bad read on the chart and it might just not be a good day for you to trade. Another thing is bad movement. If your regular system simply isn't sticking, the plays aren't following through how they normally do, the volume isn't there, the movement isn't there is nothing you can do about that. You just need to call it a day. And the other thing, of course, is if every single trade loses. If you start 0 for 2, it's much better to cut it off earlier than later. The worst case scenario with cutting it off earlier is that you miss out on some profits or making some money back. The worst case with cutting it off too late is that you blow literally everything and it's a devastating loss. There's no comparison. It is much better to cut your losses early and stop once you've lost a couple trades. Now, the protocol for actually just stopping trading is this. You physically close your laptop. You don't just close a tab. You don't just go onto a different tab. You get off the charts, you get off your laptop, and you physically walk somewhere else and do something else. For me, I'll go to the gym, I'll take a walk, I'll maybe do some content, just anything to get you away from the charts. And you do this until the market closes. You do not want to get back on the charts. You do not want to get back on your laptop until it's 4 p.m., the market is closed, and you're not trading anymore. How well you're able to stick to everything I said in this video will determine how much money you can make from the funded account. Your strategy absolutely is important, but it's not the make or break deciding factor when it comes to funded accounts. I've had multiple strategies that have worked. I've had multiple that have failed. I've even had single strategies that both failed and worked when I didn't apply them properly. So if there's one thing to take away from this, trade the funded account like it is real money. There are real stakes here, but if you apply this correctly, you will be able to scale this up to a point where it is life-changing money. I'm going to continue breaking every single piece of this down on my YouTube channel, so make sure to subscribe so you won't miss it.